Today, I'm going to teach you how to find the best breakouts in the stock market. When I first started stock trading, this is what I wanted to learn. How to find the chart setups and what to look for in a stock to know that it is about to erupt. This took me over 5 years to be able to discover, and we're going to be breaking down some of the most important techniques that Wall Street traders use every single day. As always, if you guys enjoy this video, smash that thumbs on up, hit that subscribe button right now, and let's dive right into the video. Enjoy it and drop a comment on what you want to learn next. I'll see you on the live stream. We have breakout chart setups. This is one of those lessons that every single trader wants to know. Deck, what are some of those breakout chart setups that I should be watching out for? What are some of those breakout chart setups that lead to big spikes, lead to big runs, lead to big time climbs? We all want to find breakouts. We all want to find the stock that's going to turn into that monster spiker, and we were in early. So how do we find that? Well, let's talk about breakouts and how they happen. So the two things that you want to be looking for at all times are U-shapes and triangles. Yes, guys, U-shapes and triangles. When you see U-shapes in the market, that means a breakout is on its way. When you see a triangle in the market, it means that a breakout is on its way. So U-shapes represent a break of resistance, while triangles represent a squeeze. And yes, exactly what we see right here, we're talking about U-shapes and triangles. So I want to teach you the alphabet right here. A, B, C, and D. But how can we put A, B, C, and D towards U-shapes and triangles? So I'm going to just bring over an empty little tab here, and we are going to talk about A, B, C, and D, learning the alphabet with U-shapes and triangles. Let's start with the U-shape. How does a U-shape breakout work? Well, usually a stock will spike itself on up, fall back on down, make a U-shape, and then break out on out. That's what I mean when a U-shape is formed. When a stock forms this setup right here and breaks on out. And the reason why this breaks on out is because once we establish resistance, everyone sells at resistance. And once you break resistance, that's going to lead towards a lot of new buying volume start moving itself on in. Now, as far as triangles are going to form when we have a stock that's spiking itself on up and then consolidates. And when the stock consolidates, it gets tighter and tighter and tighter. And what we have here is a triangle pattern or a squeeze pattern where a stock breaks on out and goes on a very big rip and run. There's also cases though that it could also fall back on down. But what you always need to understand with breakouts is once resistance is established, if that is a downtrend, if that is a horizontal line, if that is an indicator, once you break that resistance line, that's where a big buying volume starts moving on through. You know, for instance, we can take a look over on the S&P 500 right now. And what can we all tell on the S&P 500? We can all tell that this red line, every time we hit this red line, it usually holds on up. We've hit this red line, which is at the price of 419.45. We've been rejected. 419.45. We've been rejected. 419.45. 419.45. We bounce off 419.45. We have rejection. So when we break this resistance line, it's going to be a psychological area where people are going to say, wow, we haven't broke this resistance line before. Now that we are breaking it, it leads to very big spikes. So always understand when you break resistance, a line that hasn't been able to be broken in a while, it leads to a lot of big buying volume. Now, there's going to be one main way to always know that a breakout is going to be occurring. And the best way to know this is that a stock is going to be building higher lows. Higher lows is when a stock is slowly working itself on up. And yes, it does have pullbacks, but every pullback is slightly higher than the last one. So you can see that we have every pullback, it's not pulling back as far as the last time it pulled on back. And that's bringing a lot of excitement to these traders. That's bringing a lot of buying momentum, confidence to traders. And what this usually leads to is a very nice spike towards the upside. That's what we always want to be looking for. Consolidation of higher lows, which eventually leads to a squeeze when you usually break that strong resistance line. Now, the same thing would be if you ever are looking for a sell-off or a crack. If you're ever shorting a stock, one of the best things to look for is a stock that is building lower highs. Lower highs shows that shorters or sellers are in control. Every time the stock pops back on up, it does get a little bit lower than the last time. And guess what happens? It eventually gets that nice big sell-off because it gets to its breaking point. Let's imagine this in a completely different aspect. Let's imagine, let's say this lower high is with you and your boyfriend or your girlfriend.
What would be the lower high? Maybe again, one time, your boyfriend says, oh, I'm going to take you out for dinner, and doesn't take you out to dinner. It kind of raised your hopes and then crushed it. And then said, hey, you know what? You want to hang out with me? And no, I don't want to hang out with you. Just starts ignoring you. Okay, now your hopes are getting a little bit lower. Hey, do you want to do anything with me? No, and then finds him liking Instagram pictures of other people. Right now, your hopes are really, and then eventually you get to that breaking point where you just break up. Right? Well, we can turn that onto a positive psychological side as well, where it's it's the same exact thing, but it's, hey, this person likes me. Okay, hey, we're going on a date. Hey, we're falling in love. Okay, hey, we're getting married, right? And then you get that big time breakout. So it's all about psychology. Sometimes you get built up, and then you hit the maximum explosion, or sometimes you get put down until you're at your breaking point, and then the stock just absolutely falls apart. So that's how these work. Now, let's talk about the alphabet that I talked about to begin with on these higher low setups and how we can really be able to find these breakouts. So we're going to start with U-shapes. Now, what we need to always have is basically our key. So here's our key right here. We're going to have A. Point A is always going to be resistance, okay? So resistance. Once we know where resistance is at, we know what we must break for buying volume to come on in. Point B is going to be support. Where is the support going to be? The bottom. Point C is going to be the higher lows. Once we see higher lows start being established, we could start being able to jump in on that play because we know psychologically traders are going to start gaining confidence. And then last but not least, we do have point D, which is going to be the actual breakout, right? The breaking point, where that could be on the good side or the bad side. So let's start with a U-shaped pattern. When we see a stock go on a very big spike, we see it go on a very big spike and it hits a point. Let's say it hits $5. $5 could be a strong resistance line in past chart history pattern. $5 is a nice natural resistance, and it starts falling back on down. Whenever a stock hits a new high of the day and starts falling back on down, that high of the day is always resistance, no matter what. So that point is point A right here, right? Then the stock starts falling, and we could look at the past chart history pattern. We can try to see how high the stock has spiked before, maybe where pre-market highs are at, and be able to find where support's at. And as the stock starts finding support, we start saying to ourselves, okay, hey, we are finding point B. Where we have support is point B. And now after we have A and B established, now we can start looking for entries. Entries are going to be either on C, or entries are going to be on D. If I see that a stock is starting to build itself back on up, start building higher lows, building itself back on up, this is where you can start entering. Because we hit our resistance, we found support. We're not buying when a stock is falling. We're not buying when it's dumping. We're not buying even at support where it could possibly start falling back on down even lower. What we're honestly waiting for is a little bit of a better entry where we have higher lows and we could say to ourselves, okay, let's enter here. Let's enter here. Let's enter here, where we have a little bit more positive movement and we have a little bit more confidence in our trade. So these are all the C points right here where we could get in on this trade. And then eventually what happens, we run back on up towards this point right here, which would be point D, right? Which is the actual breakout. And that's where we have that nice big spike. So we can see that we have an A, a B, a C, and D. A establishes resistance. B is going to be finding support. C is our higher lows, which is a potential entry. And D is going to be our breakout. So let's see what we have here. If I take a look over on the S&P 500 at this moment, the S&P 500, this is a play that we are waiting for that potential breakout. If we want to take a look at this, let's just take a big screenshot at this moment. We could say to ourselves, okay, hey, this right here is point A. B would be, again, we're falling. We finally found B. Now, C, we have higher lows. We have higher lows. We could be buying this whole entire way up. We have higher lows. These are all our C points. But we have yet to have our D. We have yet to have the breakout. But if you're asking me right now, hey, Deck, can I be buying this play? I'm going to tell you right now, yes, you can. I'm going to be telling you guys right now, absolutely you can. Because buyers have full confidence. A, established resistance. B, found support. C, has been higher lows. And all traders are looking for right now the D. The D is going to be breaking on out and looking for that big time spike. So can we get that spike here soon? Can we get the breakout? Now, if we can get the breakout above, I would say 419.50, that's where I think buyers are going to really start taking on over. But at this moment, even with these pullbacks, we still have higher lows. So even every single pullback that you have at this time, you could still be looking on it as long as this uptrend holds. This uptrend holds, and that's going to be very solid. Now, as this uptrend holds, can you guys realize something? We did have a U-shaped pattern, and we couldn't break out of that D, so we got rejected. But now we're still building higher lows. And can anyone see that we're actually now starting to form a triangle? So we basically had a U-shaped pattern that tried to break on out, and now we have a triangle pattern that's trying to break on out. So remember, a triangle, a U-shape is going to be breaking resistance. A triangle is where we have our top resistance, and then we build higher lows into that top resistance. And as long as we continue to build these higher lows, we eventually get tighter and tighter and tighter and tighter until all this volume is in at this corner that something has to happen. This volume has to go somewhere. And either it's going to dump on down and we're going to see a sell-off, or we're going to see a spike on up and we're going to see a breakout. So I can tell you, I was going to say, within the next few moments, we're probably either going to see a spike or we're going to see a dump on down. And as you can see, all this volume is getting tighter and tighter and tighter. It needs to go somewhere. You know, the easiest example I can think about this, traders, is think about a volume kind of like this. Think about it as a big lake. You know, some of you guys like to go to the lake during the summer. Here's a big lake. All right, here's a big lake here. And on this lake, it's very calm, right? You can go swimming. You go swimming in the lake, having a good time. There's this guy right here. He's sailing, right? He's having a good time. This guy is, off the shore at this moment, and he's just, fishing a little bit, trying to get. Here's again some people, riding some water skis and, jet skis and all that fun stuff. It's just a very calm lake at this time. But what happens if you follow the lake? If you follow the lake, and you get to that one point, eventually that lake is going to get tighter and tighter and tighter, or it could have been before it where it's tighter and tighter and tighter, and all this millions of gallons of water is going to flood into a very narrow area. And what do we call this? This is where we start having rapids, right? Where we have those class 4, class 5 rapids. Because water, when it's moving, we have all this high energy and all this water going into this little canyon. It's having so much energy. It's just going nuts. It was super calm before, but now it's nuts because it has so much of this power in such a small area. Welcome to how these triangles work. We have all of this power, and before it's a little calmer, and now we have these big red candles because it's all getting pushed, it's all getting funneled to the same area. So that's the big thing, and you can see actually how this has happened a few times already, where we're looking for breakouts and we haven't gotten the breakout yet, where we can see a triangle here. You guys can also see, look at this triangle right here on the S&P 500. The S&P 500 has yet to get its very big spike and breakout, but look at this triangle. You can see the same idea. Spike on up, fade on down, spike on up, come on down, spike on up, come on down, spike on up, come on down. Needs to get to the triangle and break the top resistance line. But you know what? It couldn't do it, and look at all that water pressure, all that volume that has to go somewhere leads to the sell-off. So when we're taking a look over on these plays, we can see where these big time spikes are going to occur. Well, Deck, what about this big time spike? Well, let me ask you guys something. What happened on this play over on the S&P 500? Now, these are not examples from a textbook. These are examples from this morning. This is how confident I am with every single thing I teach. I can literally look at today and show you everything that's happened. So you can see we got rejected here. And traders say, okay, this is a rejection area, right? When we get rejected at this mark right here. And you can see we get rejected here. And that's a strong resistance area. Now, guess what? Don't we have our A right here? If we have resistance and resistance, that's where we have our A. And then eventually, we do find our B. And we do have a U-shaped pattern starting to form ourselves on up. We start building higher lows. We finally get the breakout, and boom, we got that big rip and run. So it's so important that we can realize this. Now, when it comes down to a triangle, let's just kind of talk about our triangles here. How does a triangle have its A, B, and C? Well, if we have let's say a spike, whenever a stock goes on a spike in real time, whenever it hits a high of the day and pulls on back, that's always going to be our A. So if you're ever wondering how do you find A, it's always just going to be the high of the day. The high of the day is always going to be that A point, that resistance line. Then as the stock pulls on back, we start getting a bounce on up. Now, we might think at first that this could be a U-shaped pattern, and you could mark that as a B, but it all comes on down towards what point? If it comes back on up and we don't exactly get back up towards A here and we start falling, well, now we can see we're building a little bit of lower highs, and then if we bounce back on up, we're building a little bit of higher lows. We could see we're starting to get tighter and tighter and tighter. So it really, in my eyes, entries on triangles don't start forming until we start realizing that we have higher lows. And once we have higher lows, that's going to be a great sign where we can start saying to ourselves, okay, hey, higher lows, potential triangle coming on up here. Watch for this potential squeeze in the near future. So it really comes down to A, is that high? B is going to be a little tricky until we basically have a higher low. And then once we have higher lows, we can start saying to ourselves, okay, we have to squeeze above resistance. Once we squeeze above resistance, that's where we're going to start getting our nice big breakouts and our nice big rips and runs. So let's start talking about some of these patterns. And I'm going to jump ahead a little bit because I want to stick with these U-shape and triangle setups first. So U-shape breakout patterns. This is a screenshot of a normal U-shape setup. It always starts off with a morning spike. It starts off with a pullback, higher lows, and breakout. A point, B point, higher lows are C, and then we get our D, which is our breakout. So our U-shaped criteria, we're looking for the very big spike at the start of the day, we're looking for the pullback, and then we're looking for that breakout on that next leg. So this is just a standard U-shape looking for this very big spike. Now, not only do we see U-shapes just off of a U-shaped breakout, I call it, but we also have what I like to call a red to green move. Now, if you type in red to green move over on Google, it's going to tell you that a red to green move is a break of the previous close. That is the textbook definition. But for me, I see that we have a lot more attention, a lot more volume, a lot more breakouts when we actually break the open of the day. So when we open up, let's say at $5, and we drop on down to, let's say, $4, and then we U-shape back up to $5, that's usually where we have a very big breakout. So this is going to only happen from large volume, and the only way we get large volume is from a previous day top gainer or from a large gap up. U-shaped breakout patterns are always going to be from big spikers in the morning. These patterns that I teach you will only happen with big volume. Big volume, most watched play, underline that right now. If you see a play that has low volume, these patterns will not work. These patterns will only work when everyone else is looking at them because they're going to have the most power then, okay? So when we take a look over on this example like CDXC, it starts with a morning spike. So everyone's looking at it, which is why the U-shaped pattern is so well. On most plays, if they open up with a dump right away, such as RGSC right here, no one's really going to watch this play. The only way that people would watch this play is if it was a previous top gainer or a gap up in pre-market. So RGSC was a previous top gainer. You can see it was all the way up at 750. And then it opened on up, fell at the start of the day, broke its open, went on a massive spike. But you can see how this is a beautiful U-shape and then got a nice rip and run. You can also see right here, here's another what I would call a red to green move. It's not from its previous close, it's from its open, where we do have a gap up. It falls at the start of the day, and then look at the volume that moves in on this play as it comes on up and breaks through that resistance line. So it breaks through this resistance line, and you can see how well it spikes on up. So that is absolutely gorgeous to be able to realize this U-shaped pattern right here. One of my favorite chart setups, bull flag pattern. Low float can happen on any time frame. Watch for consolidation after a morning spike, and as always, it must have that big time volume. So usually it's going to be one of the top gainers to kick off the day. And a bull flag pattern, great spike, consolidation, that river is getting tighter and tighter. That volume has to go anywhere. When we have higher lows, sometimes it's going to lead to that big time spike on up. You can see it right here over on JVA. Big time spike, higher lows, top gainer, big volume. Traders start pushing that one up even higher. Here's CEI, very big spike, consolidation. Traders are again saying which way is it going to go. Breaks through top resistance, breaking up resistance. We get our monster move here. This is the ascending triangle pattern. So we just had bull flag patterns. Bull flag patterns is when we're going to have higher lows and lower highs. Ascending triangle patterns is when we have strong top resistance and higher lows that go into it. Same exact thing. Must have massive volume, must be a top gainer, must be watching this play for these nice big spikes. Something I will tell you that's extremely important about ascending triangle patterns is always at the corner. Same exact thing with bull flags. At the corner is where you get a breakout. You might say, Deck, what do you mean by the corner? The corner is here. Corner of the triangle, you get your spike. Corner of the triangle, you get your spike. Corner of the triangle, you get your spike. That's what you want to look for. Ascending triangle patterns, same exact thing. What's the difference? Instead of building lower highs into higher lows, you just have strong resistance already established across the board and you only build higher lows. Now, let me ask you a question. Think about it. What would have a better chance of success? A bull flag or an ascending triangle pattern? The answer is an ascending triangle pattern, because bull flags have that hint of a negativity. A bull flag spikes on up and it has lower highs while it also has higher lows. So it's basically like a 50-50 battle where maybe the puts are going to win while also maybe the calls are going to win, or the buyers versus the shorts. In this case, the ascending triangle pattern, we already have a clear-cut winner. We can already see that shorts or sellers or puts are basically just holding at this line. And if this line breaks, we're going to see a very nice spike. So the ascending triangle pattern, we can see 1 touch, 2 touch, 3 touch, nice big higher lows, squeezes in the corner, nice big breakout. We can see 1 touch, 2 touch, 3 touch, building higher lows right in that corner, big time breakout. Squeezing that volume and that hype towards the upside, that's what we're always liking to look at. That's where we have a lot of big time attention. So far here, let's just recap here for a second. We've learned a lot about U-shapes and triangles. We've talked about U-shape patterns. We've talked about the standard U-shape kind of breakout in the morning, U-shape up and around. We also talked about red to green moves, which is a gap up or a previous top gainer, crashes at the start of the day, breaks its open, then goes on a spike. We've talked about bull flag patterns. We talked about ascending triangle patterns. These patterns you can all correlate and say to yourself, hey, you know what? I think that these are going to be awesome setups. And this is what I trade every single day. The next one that I want you guys to study is going to be the mid-candle breakout pattern. The mid-candle breakout pattern is one of my favorite breakout patterns there are. It's when we have a low float, a previous top gainer. This one's a little bit different though. It only happens on the daily time frame, not the 1, 2, 3, 5 minute, only on the daily time frame. And this stock will give back half of its gains the day before and then spike in the future. So I'm going to show you an example of this. What the mid-candle breakout pattern is when we have a monster spike. Usually it's from some sort of news. So let's imagine news comes on out. Here comes news and a stock becomes a massive top gainer, okay? What usually happens is we have such a big spike, people say, hey, I'm gonna short this. I'm gonna lock in my profits. I'm gonna see the stock fall, because we just went on this big time climb. Everyone starts selling or shorting and we fall back down towards around mid-candle of the initial spike. The following day, people think to themselves, hey, this stock fell back down. It's a great dip buying opportunity. And because we had good news, everyone starts buying it back on up. Well, this squeezes out all the shorters. This makes all the shorters run for their lives. And now we have another very big breakout. So we would have SPU, very big spike, falls back down because people take profits and shorters try to take over. The following day, we see that this play is a great dip buy and now we squeeze out shorts. It happens here. Monster spike. Next day we fall to mid candle. Buyers see this as a dip buying opportunity, goes on a big time breakout. Now this only happens when what happens, as you can see, monster breakouts, monster spikes. So this will not happen if you see a breakout that goes from $1 to $1.50 and a stock goes down 25 cents. Mid-candle breakout patterns are clear-cut winners. Clear-cut, like HMNY barely has any volume, and then we go from $2 to $17. It works on supernovas, monster breakouts, and monster spikers, okay? So let's keep going here. What's another one? And you guys may say, Deck, did we miss one? We went over bull flags, we went over ascending triangle patterns. Well, what about descending triangle patterns? Descending triangle patterns, so far we've gone over this. Bull flag pattern is where we had a spike. We have higher lows while also having lower highs. We've had also ascending triangle patterns where we've had very big spikes, hits resistance, and only builds lower highs until we break on out. What about descending triangle patterns where maybe the stock spikes on up, builds lower highs? Could this break on out? Well, I'm going to tell you this right now. When a stock is building lower highs, that's not good. That means shorters are in control. So this is not usually a pattern that you ever want to play. But this will work on a daily chart after a giant supernova. And this is where people will find the best dip buying entry. So if you ever see a giant big time spike, and when I say supernova, I'm talking about a stock that goes on like a $10 rip, a $15 rip, and I'm talking about like a stock that goes from $5 to $20. I'm talking about a stock that goes from $15 to $35. You know, a very big climb here. Everyone will buy when you break the downtrend after finding support. So you can see it found support and it consolidated a few days. Once it broke the downtrend after finding support, which forms a triangle, that's where everyone buys back on in. Same exact thing. We have a very big spike on up. We can build our lower highs. It finally found support, old support here, broke this downtrend, did get a nice spike back on up. So sometimes it might take a month after a big time supernova breakout. And this is why you really don't ever want to be trading for a descending triangle pattern. Descending triangle patterns just really aren't that great in majority of the time. So remember, what are the setups that we'd like to look for so far? And I just want to make sure everyone's really gauging this and really understanding how these trades are going to be working. So what we're always on the lookout for every single day is we are going to be looking for stocks that spike on up, form resistance, and either U-shape themselves for a big time breakout, or if they can't get the breakout, they start building higher lows, and now we have a triangle. So U-shapes are always going to be our first option. If we can't break out, then we're looking for our triangle. We know all of our different options that we have so far. We do have our U-shaped breakout pattern. U-shaped breakout pattern is always going to be a morning spike, get hype. Then since it has so much attention, when it comes back up to resistance, we get a breakout. We are also going to have our red to green moves. Red to green moves is from a previous top gainer or from a stock that has a large gap up, which has such a big gap up, it falls on down, but traders are still keeping it on their watch list. And once it comes back up towards its open, it gets a very nice breakout. We also know that we're going to be looking for bull flag patterns, which is a nice morning spike, has a lot of attention, builds higher lows while also building lower highs. Stock gets tighter and tighter, squeezes in that triangle, and then gets a very nice spike. We also know we have ascending triangle patterns where we have a very nice spike. As we know, we have our top resistance going across the board, and then the stock builds higher lows into that until it eventually squeezes and breaks on out. And that's where we have that very nice spike as well. Now, other than kind of our more advanced patterns, instead of our U-shape or red to green move, we could have a mid-candle breakout pattern, which is a U-shape pattern when you think about it. We do have our monster spike. We do have our following days are going to be a pullback. And then the days after that, we're going to start moving ourselves back on up on a squeeze. That is a U-shaped pattern, breaking old resistance, bringing in buying volume, squeezing out shorts. And then we also do have on the daily chart, if we have a very big spike in the past and then day after day after day after day after day after day after day goes by and we don't have any sort of spike on a big supernova, when we do break this downtrend, that's where buyers are going to start moving on in, and that would be that descending triangle pattern. So U-shapes really do curve the way on us being successful. And after U-shapes, we have our triangles. And these are just going to be able to help us understand how to be trading in the stock market every single day. Now, Deck, is there any sort of other patterns that we want to be looking for? There is what we call a $1 breakout or a $10 breakout. When a stock breaks $1, it's a very strong psychological move. So $1 is always a very strong area where if we were underneath $1 for a very long time, you could see some monster spiking. Same exact thing with $10. They're more of just like a psychological move that when you break these areas, you can see very big spikes. So for instance, if you were underneath $1 for a year, 2 years, 3 years, going from actual pennies to now $1 per share always brings in multi-day volume. Multi-day volume, it does bring in a lot of hype and attention. We can see right here, GNUS was underneath $1 for years. It broke $1, it ran all the way up towards $11. You can see BNGO right here. BNGO was underneath $1 for years. It broke $1, ran all the way up to $14. Breaking $1 is like a huge wall. It's like basically going from high school football to D1 football, then going from D1 football to NFL. To break those next barriers are huge accomplishments. And in stock trading, going from the penny per share to now $1 per share company is a massive accomplishment. So these are the things that I really want every single trader to be able to understand and how to be able to make this money. always be looking for U-shapes, always be looking for triangles, always be looking for higher lows, and always understand as you build higher lows, that's going to be one of the best entries. When you break resistance, that's also going to be the other best entry. Look to buy on the C and the D. Don't look to be buying on the A and the B. U-shapes, triangles, remember them, study them, look for them. They're going to be everywhere on breakouts, and that's how you know to get the greatest entries.